Hello traders, how are you? Vladimir Ribakov here, Traders Academy Club. Welcome to the weekly Forex forecast for the week of 25th to 30 August 2019. First of all, thank you very much for finding the time to watch my video, and if you are new to the channel, I would like to invite you to subscribe and leave your comment below in the section of the comments if you enjoy the video and if you enjoy my work. Feel free to share the video with anyone you wish. Join the free Telegram channel of our community, and I invite you to join the live trading rooms we run day after day in Traders Academy Club. To do so, just follow the links below in the description. And now let's begin. A lot of fundamental main events, major events we might say: China, Trump, Brazil, Germany, UK, and all around the world is surrounded by kind of wars between quiet wars between some countries, and it looks like things are slowly warming up to the unfortunately negative side. This weekend will be the full focus of the G7 and the 7 most developed countries, where the main focus was and will remain USA-China relationships, China-Hong Kong, and of course Brexit. So what we will be doing right now, we will be reviewing the previous week forecast, which you can find in my blog. And this is a good time to remind, on Monday I will be publishing a new forecast, text format for the forecast, and you just come back to the blog vladimirribakov.com. You will be able to find it here, or just follow the video link, come back to the video, and below in the description and in the comments you would find a direct link to the text format as well. I'll be also sharing that in the Telegram channels, of course, those where I invited you to follow. So what do we have on the coming week? Let's review from previous week and build up the plans for the coming week to see what worked, what failed, and what still runs, and what's building up next for us. Pound Australian, we wanted to see two waves play inside this bigger range zone, where from we would be able later to go and try the sells. So here is the pound versus the Aussie, building up this second leg, approaching towards the 50% of the daily triple cycle, this one, and this should be some good zone to start looking for sells. However, what's required for us to see here, we do want to see some ending divergence, which currently does not exist. That means we might see anything like that, or further deeper correction, or a hidden divergence for trend continuation from the official highs, also currently is not there. On the 4-hour chart, we also, if we take a look on the way it builds up, there is no ending divergence place at that moment. That's what makes me think that the correction to the upside is not over, and there is a good chance we will see that pushing even further. So the way I see that, pound Australian, while holds above this level or this trend line, right, two of these critical levels, would be trying to push it higher on the short term. And once the 4-hour divergence and the daily divergence would form, we will return to the main idea that we had before from the weekly cycle, going for the sell. Next one in our list, so pound Aussie basically working pretty good so far, developing correctly. Australian versus the Kiwi, we were bullish, expecting that to reach 106.10 area. So let's take a look what did we have with this pair. Here we are, we have reached the 106.10 area, a few pips higher, and the correction started. So what's happening with this pair? According to the weekly, the pressure is still bullish. Last divergence is bullish. According to the daily, the momentum after the break of the trend line is still there. No ending divergence or so to end this run. Therefore, we treat that as a corrective cycle, which we will want to go and buy further, exactly as was originally planned previous week. So we do want to see corrective cycle. Corrective cycle could be in two waves. Corrective cycle could be in any given range that could build up anything like that for us. We don't know how exactly it will develop. Ideally, of course, always to get two waves, some bullish divergence sign here, and then start looking for further buys. Now that would be the plan for the Australian versus the Kiwi. What should we be paying attention to? This supportive area, which goes basically from around 105.20 down to, as you can see here, 104.80. We do have the 200 moving average, which continuously holds a bullish momentum on both 4-hour, and currently we're above the daily as well. So the closer we get there, the stronger the pressure to the upside should be. And of course, clearance zone. We have a clearance zone in play here, and one is slightly lower. The closer we can get to them, we might be experiencing bullish attempts to the upside. By the way, I also would like to remind you, or if you watch that for the first time, this channel, that I have daily Forex trading ideas that I publish to my community and to the YouTube channel. Right now on the right corner of the video, you will see the direct link to this playlist, or you can just simply find this playlist inside my YouTube channel. I speak about all these opportunities, the most interesting ones I can see day after day. On the coming week, there will be no such videos because I'll be away with my family. So we go back to that week after. Meanwhile, you can of course go and have a look on the opportunities we discussed about on the last couple of weeks and see basically if it is useful for you. Next one on the list, New Zealandian versus the Canadian. The bearish pressure remains on for us, and the expectation was to see a new low reaching on a daily chart. And here we are, reached a new low on that daily chart. Do we have a trend reversal sign? A higher highs created after false breakouts? The answer is no. Currently, no higher highs are created and no structures of 3 higher highs, higher lows. It still does not exist. Therefore, the pressure is still bearish. We can experience retraces, but I believe there is more to come to the downside. So this does not change. However, because of the divergence that we start to see on the daily chart, the slowdown that we can see here building up, and the 4-hour chart, which starts to slow down as well with its moving average, and the fact we are dancing around the psychological level of 0.85, this would be a good place for some cash outs to enjoy the ride and not to let it go if things change. Next one that we had was the dollar versus the yen. The idea was two waves and sell continuation. We got the two waves here with a flat top. It did not manage to make a new high, but the divergence was there all the way around on this flat top. What happened since was a mini false breakout on this top and this kind of trend lines break with lower lows existence. Now take a look on the bigger scenario. The cycle we are trading here is the daily triple double. That means we are aiming to the 100%. This place is classical for the bullish divergence to form. Therefore, the pressure still remains bearish for us, and the idea is still bearish also in the developing trend. You can see the MACD currently classical in a bearish existence, no bullish divergence. For our chart, coming down after bearish divergence, crossing the bottom to the negative zone, and the weekly is also riding momentum, bearish momentum on the MACD. This is a beautiful price movement so far. There is a good chance that the pair will continue to the 103 zone, or as you can see here in this channel, maybe even much lower on the in the future. Meanwhile, the pressure of ours remains bearish, the expectations are bearish, sell the rallies is still the plan. And for all those of you who are involved already, just enjoy your pips. That's pretty much it. And remember, management is important. You do not want to basically be exposed to randomness from the market and lose a great profit. Next one is the euro dollar with expectations to see a new low on the 4-hour chart, while we are surrounded by the area of 110, and we got the new low created around this 110. And now what do we have since? We have two false breakouts with a bullish divergence and the convergence principle. Daily also is building up a bullish divergence, and that brings back the weekly divergence and the fact, you can see here the tick to the upside, and the fact that we are holding the psychological level. Also the zone here of 110 and this clearance area are still holding. Now, considering the fact that the 4-hour chart is making the higher highs, might change the direction, and that is the place where I personally am going after buys. The sells made a movement. It was not big, but it paid the expected new low. The 110 is holding. Divergence all around, two false breakouts and convergence deriving from the 4-hour chart. This is the place where I believe we should be exposed at least to corrective cycle, if not to something much deeper. Only time will judge. As for now, the euro dollar changes its direction to the upside. Next one on the list is the pound versus the Kiwi. We were trading the two waves on the daily time frame, and boom, here we are, got paid. So far so good, it works simply beautifully. The two waves reached the 50% of the triple cycle, and currently, as you can see, we start to develop some bearish divergence, bearish hidden divergence, while the 4-hour chart also starts to slow down with its divergence on the histogram here. So this is a great place for the pound versus the Kiwi to cash out. There are no evidences for sell, and they do not fit in the cycle that currently exists on the monthly and the weekly combos. So it's a only partial cash out, not full, because the higher time frames are still bullish. And after any sort of retraces, I believe there is more to come. So the way I act in such scenarios, enjoying this ride, it's about 400 points ride here. It's a good partial cash out, money in the pocket. Let the rest run, stop loss to break even, and it's a risk-free trade. If a correction does happen and provide another fresh buy opportunity, we can take the closed partial profit and bring it back into the buy position, into the total exposure here. So pound Kiwi, another good one, another good pay. Pound dollar, wanted to see the two waves building up here. before going into the future sells again. That's the two waves. They are building up pretty much beautifully there. And now let's take a look on the bigger picture with this pair. As you can see, there is a bullish divergence here, which brings the probability for this to be, this is a correction as a range, as a triple cycle. Now we can argue here about the correctness of that and so on. The idea that this could turn to be corrective cycle by itself, meaning two waves from the daily chart, is there. The dailies also could still create a bearish hidden divergence for the right down, but that's there are no signs for the next sells, which I would be expecting once we cross this clearance zone. And the reason for that is that this clearance zone is cleared, but take a look what happens. No two candles rule, which means none of this was breaking down to validate corrective movement here and here. We are holding these last two candles of the rally. The range is not broken. That brings back the possibility that this is only the first leg. And after it retraces, we could be exposed to deeper leg. There is one level to pay attention to. This level sits right here around the 124, 125, where a banking zone and a lot of resistances and support are located here. So there is a good chance we are aiming slightly higher in the current correction. Also, if we observe only on the current 4-hour chart, a cycle that could be broken into anything like that, that means 50% also could be reaching in a play, and that brings us to the same zone. So, long story short, for the long term, there is no trend change yet for the pound dollar. However, on the shorter view, the correction is still in a play, and I do think it should take us a bit higher. 124, 125 sounds like definitely like possible places. What's next there? Time will judge. As long as there are no trend change signs, we'll be looking for continuously sell there. As for now, though, the short-term pressure, the short-term correction that we started from the previous week here still continues. Next one, CAD versus the yen. The idea to, like the dollar yen, two waves and a sell. Paid pretty classically. Again, pretty flat correction. The second leg never managed to make any new high, but it was holding the bearish momentum. And with the break of this triangle, we got the continuation. A new low is achieved, cleaned, reached. No divergences currently in play on weekly, daily. No false breakouts and higher highs. So the idea will still remain bearish for this pair. Next one on the list is the euro yen, which also we wanted to see a pullback to the top of this range and sell, or the hold of the triangle and little rallies and sell continuation. Second option is the one that currently is in play. We got a slow push holding the falling highs and move down. No reversal signs yet, only potential as divergence, and as the trend is still under continuation. As per the levels, we can clearly see that once the 100 was broken, there is a good chance we are after the 161.8 or so. There is something to pay attention to, and this is the current 117, which is a gap zone, classical gap there, which could cause some fight, but there is no trend change, therefore rallies to be sold yet is still the plan. For all those of you who enjoy the sales, as I always say, management is critical in such occasions. Make sure you cash out part of your positions, or at least trail your stop loss, and you make sure that you would not be exposed to randomness of the market if it suddenly goes against, and it could happen, especially now with the G7 meeting. A lot of things could change there. Next one is the New Zealandian versus the franc, where we want to go for a sell, and it also is pretty much like the New Zealandian dollar. So let's start with the New Zealandian dollar, because this one was creating the new low as we expected. We can see that we are facing Bollinger Bands duplication right now with some slow down, where the 4-hour is making it much clearer on its slowdown, and I would be enjoying the freedom here by cashing out and waiting for the next signs. Did the long-term trade change? No. I believe we should be exposed to corrections and sell continuation. I do not see any reasons for buys, and I do not see currently any reasons to hold the sells. So it's closure of the sells, enjoying the profits, looking forward for next opportunities. And the New Zealandian franc also is making its second push, as we expected to see, with a new low, and this low is coming and developing. So what should happen here is the last leg from the daily divergence should form sort of a leg on the 4-hour chart, and that could be developing by itself here, or starting with this from this range until the divergence would block. Meanwhile, the pressure is still bearish, and so it remains. Dollar Canadian, we wanted to see deeper correction as it's facing sort of top with the divergence. So dollar CAD was fighting there, was trying to make anything higher, but it still holds this level with still same divergence. Therefore, we are currently in the corrective mode on the dollar CAD. I suspect a correction before a further continuation to the upside. The correction could be in 2 waves until a bullish divergence would appear. The correction could hold it as a range, as a patternal range, or as a horizontal range. This or other way around, the idea remains the same, retraces and buys. Nothing changed there. And next one is the euro versus the pound, where we wanted to see 2 waves forming. Now this one was one of the trades we traded on this daily trading opportunities I mentioned before. Once again, you would be able to find them all in my YouTube channel. And here is the second leg developing. So we should be preparing likely for further buy opportunities. The best way to see that happens is, first of all, break of the trend line. And if we start to create the structure of higher highs, higher lows, we can then talk about next further buys. Pound versus the Canadian. The view was bullish in this special cycle. We were after buy retraces as a range or 2 waves. And the pound Canadian formed a range for us right here. And this range was holding and delivering its further rally. What's next with this pair? According to the special cycle, I would still expect it to reach 38 to up to 50. So any retraces, and I still keep my bullish view here. Retraces on the short term are acceptable, but the trend likely should not change. I believe we are heading to deeper correction to the upside. Now we are into commodities and indices. Natural gas which broke the trend line, I continue with my bullish view. This is the main trend line I want to see broken. So far did not happen, but I still hold my bullish view. Gold, finally, after holding this corrective range, let me just draw it here, finally provided the two waves. Hold on, where is my line? Here. Provided these two waves inside this consolidation, bullish divergence came in play, and we got the breakout and the continuation. And I believe there is a bit more to go for this one. So a bullish view is relevant for both gold and silver in the current regained momentum. It will take time until it's completing the end, so the view remains bullish here until this would become the next divergence. Nasdaq and DAX, and where is my, here, S&P. So corrective cycle in play and further expectations to the downside. Well, it was all gained thanks to, of course, China and USA relations, but that's the two waves that were completed, and that's finally false breakout that we gained here with the lower lows gain. That's the main factor here in the display. So the daily basically built this mini hidden divergence here, and the 4-hour built its own sign there. So the biggest question is, are we ready for the big cycle to be in play here? Time will tell, but this false break definitely starts to look good. And if this month ends as bearish as it looks right now, that might be the beginning of something deep. So personally, I think there is more to go, and I continue to hold my bearish expectations and view. And now that this big trend line is trying to break, it should be a good sign for the trend continuation. So once again, we got our lower lows finally after the second leg correction, and the main factor right now is this. Now, what cycle we trade here? It's a very important question, because if we refer to this cycle, then the 38.2 was taken, game is over. But if we trade a massive long-term cycle that we have, from the monthly, like with the S&P, and this is going to end as bearish as it looks, that might be the beginning of something very, very, very deep. And that's the only cycle I can see currently trading in play. So after getting the two false breakouts and lower lows on a daily, making the convergence, making the two waves retrace and breaking it through, if nothing changes fundamentally, my view remains bearish. German DAX wanted to see the two waves and sell. Currently we got it here. It's much clearer view on the 4-hour chart, by the way. So the biggest question here will be, are we going straight forward from here after this correction, or is it going to make something like that first and then sell? This or other way around, my view remains bearish only after sales, and I do expect new lows to be reached and achieved. And that's pretty much it with the current week opportunities. As you can see, there are plenty of them. A lot of moves happen. Let's see how the market would be. A very, very important thing to mention here: be careful with all these fundamental things. They could create some temporary noises, but they also could be the ones that will design the next direction the financial or the economical wind will blow. So stay tuned. Do not close your eyes to reality. It's very, very important. And once again, I would like to thank you for your time watching this video and to invite you to my live trading rooms where we run them on daily basis for you with full trading report and full of opportunities that you can enjoy from. Thank you for watching. I wish you a wonderful trading week. Please note, next week I would not be around, as I already mentioned, for daily videos, and for the next weekly forecast is under a doubt, under a question. I'll see how I manage to do it with time. If I would not be able to do that, then I'll see you in 2 weeks from now. And for all those of you who have kids that will start a new educational year soon, my warmest wishes, best of luck to them, and may they enjoy their educational gain and good time in school. Once again, thank you for watching. I'm Vladimir Ribakov, Trader Academy Club, and I'll see you around.